The man who built the largest hedge fund in human history just told the world that money, as we know it, is dying. Not someday, not in theory, now. And while most investors chase returns, he's quietly preparing for something else entirely, the collapse of the system that made those returns possible. His name is Ray Dalio, and his 4 investment picks for 2026 aren't tips, they're warnings. Welcome to the financial system. Control the money, control the history. And remember, simple is never easy. Most people know Ray Dalio as a billionaire. Fewer understand what made him one. In 1975, a 26-year-old kid from Queens, New York, son of a jazz musician, started a company out of a 2-bedroom apartment. He had no clients, no reputation, no safety net. He'd just been fired from his previous job for punching his boss at a New Year's Eve party. That company was Bridgewater Associates. Over the next 5 decades, it became the largest hedge fund on Earth, managing over $160 billion in assets. Its flagship fund, Pure Alpha, returned 33% in 2025 alone, the best year in the firm's 50-year history. Bridgewater has generated more than $58 billion in profits for its investors since inception. Dalio himself is worth somewhere north of $15 billion. He predicted the 2008 financial crisis before it happened. He predicted the European debt crisis. He predicted the inflationary surge after 2020. And now, in early 2026, he's predicting something bigger. Something he calls the breakdown of the monetary order itself. Before we get to his 4 picks, you need to understand the diagnosis, because Dalio doesn't pick investments the way most people do. He doesn't look at charts and guess where a stock is heading next quarter. He studies 500 years of economic history, maps how empires rise and collapse, and then positions his money based on where we are in that cycle. Right now, he says, we are in the late stages of a major debt cycle, and the numbers back him up. The United States government currently carries $38 trillion in debt. Annual interest payments alone now exceed $1 trillion. That's 17% of all federal spending going just to service what's already owed. America borrowed $43.5 billion per week in the first 4 months of this fiscal year. Not to build anything, not to invest, just to keep the lights on. Dalio puts the problem bluntly. Do you print money or do you let a debt crisis happen? That's not a philosophical question. It's the exact choice facing every central bank on the planet right now. And history shows that governments always choose the same path. They print, they devalue, they erode the currency so quietly that most citizens don't notice until it's too late. Dalio calls this pattern timeless. He's seen it in the fall of the Dutch Empire, the decline of the British pound, the collapse of Weimar Germany. Every time, the script is identical. Debt grows until it can't be honestly repaid, and the currency absorbs the loss. The people who hold cash get poorer. The people who hold real assets survive. That's not opinion. That's the pattern of 5 centuries of data. So what does Dalio actually recommend? Not stock tips, not hot sectors. 4 structural positions designed to survive what he sees coming. Pick number 1, gold. And this isn't a fringe recommendation from a newsletter writer. This is the founder of the world's largest hedge fund telling you to put 10 to 15% of your portfolio into a metal that pays no dividend, earns no interest, and sits in a vault doing nothing. Why? Because in 2025, gold didn't just outperform stocks, it destroyed them. Gold rose 65% in dollar terms. The S&P 500 returned 18. Measured in gold, American stocks actually fell 28%. Let that sink in. The greatest stock market in the world lost nearly a third of its value when measured against the oldest form of money humans have ever used. Dalio explains this with the principle most investors ignore. Gold is the only major asset that is not someone else's liability. A bond is a promise. A stock is a claim. A bank deposit is a loan you've made to a bank that may or may not survive the next crisis. Gold is just gold. It cannot be printed, sanctioned, frozen, or inflated away. And right now, central banks around the world know this.
They've been dumping U.S. treasuries and buying gold at a pace not seen in decades. China, in particular, has been shifting its reserves away from the dollar and toward hard metal.
When Dalio warns of a coming capital war, where nations weaponize money through sanctions, embargoes, and asset freezes, gold becomes less of an investment and more of an insurance policy against the disintegration of trust. Pick number 2, inflation-indexed bonds. Specifically, Treasury Inflation-Protected Securities, known as TIPS. Dalio calls them the safest investment you can get right now. Not the most exciting, the safest. Here's why. A regular bond pays you a fixed rate. If inflation runs higher than that rate, you lose purchasing power every single day you hold it. You're lending the government money and getting paid back in currency that buys less than when you lent it. TIPS solve that problem. Their principal adjusts with inflation. If prices rise 5%, your bond adjusts upward by the same amount.
You're guaranteed a real return, currently a bit above 2%, on top of whatever inflation does. In a world where Dalio expects currencies to lose value systematically, that guaranteed real return is worth more than most people realize. He's direct about this. He says markets are a zero-sum game. For every winner, there's a loser. And if you're speculating, you're probably the loser. TIPS let you step off that battlefield entirely. You don't need to guess where rates are going or which sector will outperform. You just need to protect what you have from the slow erosion that Dalio sees as inevitable. Pick number 3, diversification. Not the way most people think about it, not just spreading money across 5 tech stocks and calling it balanced. Dalio's version of diversification is mathematical and ruthless. His mantra, 15 good uncorrelated return streams. Not 5, not 8, 15. He says that level of diversification lowers portfolio risk by approximately 80% and raises the return-to-risk ratio by a factor of 5. That's not marketing, and is the internal framework Bridgewater used to become the most consistent macro fund in history. The logic is simple, but counterintuitive. Most portfolios fail not because the investor picked the wrong stock, but because everything in the portfolio reacted the same way to the same shock. When markets crash, correlated assets crash together. Stocks fall, corporate bonds fall, real estate falls. The investor thought they were diversified because they held different names, but they were exposed to the same risk, the risk that confidence evaporates all at once. Dalio designed his all-weather portfolio in 1996 to survive exactly this scenario. The idea is that the economy moves through 4 seasons: rising growth, rising inflation, falling inflation, and your portfolio should hold assets that thrive in each. Stocks for growth, long-term bonds for deflation, commodities and gold for inflation. And the blend should be calibrated not by dollar amount, but by risk contribution. No single season should have the power to destroy the whole. That's not a theory. It's the architecture behind a fund that has survived every crisis from the dot-com collapse to the pandemic and made money in most of them. Pick number 4, and this is the one most Americans don't want to hear. Reduce your exposure to the United States dollar. In 2025, the dollar fell against virtually everything. It dropped 4% against the Chinese yuan, 12% against the euro, 13% against the Swiss franc, and 39% against gold. The biggest investment story of 2025, according to Dalio himself, wasn't AI stocks or tech earnings. It was the collapse in the value of money, and he expects that trend to accelerate. When he warns of a capital war, when he says we are on the brink of nations weaponizing financial flows, he's not being dramatic. He's describing a world where holding all your assets in one country's currency is no longer diversification. It's a concentrated bet on a system that's showing cracks everywhere. Foreign buyers are already pulling back from U.S. treasuries. China and parts of Europe are buying fewer American bonds, worried about sanctions, embargoes, and the risk that their own assets could be frozen in a geopolitical confrontation. That means America is increasingly buying its own debt, monetizing it, which weakens the dollar further. It's a loop.
and the longer it runs, the harder it becomes to stop. These 4 picks, gold, inflation-indexed bonds, deep diversification, and reduced dollar exposure, are not about getting rich. They're about staying solvent in a world that Dalio believes is undergoing a once-in-a-generation monetary shift. He's not telling you what to buy, he's telling you what to survive. And that distinction is the difference between investing and hoping. If this gave you a new perspective, hit subscribe. It's the financial system, and history leaves clues. I show you where the money leads.